Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news of a settling of the global economy after some big announcements in China. So far, little seems to have changed, other than investors now think they can't lose with their Chinese equity investments. But first, the surge in American mortgage applications we noted last week has extended. Last week they soared 11% from the prior week, extending the earlier 14% gain to lift mortgage application volumes to their highest level since June 2022 and now above year-ago levels. It's been a sudden shift. In fact, it is their best two-week period in their housing market since late 2015. The upswing in home loan demand came as benchmark mortgage rates there fell to a two-year low of 6.13%. And Taiwanese retail sales were subdued in August, rising only 1.1% from the same month a year ago. But their industrial production was up more than 13% on the same basis. After China's big signals of substantial monetary stimulus and yesterday's follow-through of a 30 basis point cut to their MLF rate to 2%, its biggest cut ever, you might have thought that commodity prices would have risen in anticipation of a meaningful market reaction. But they haven't, not yet anyway. The copper price rose prior to the official announcements, but hasn't kicked on today. Iron ore has stayed subdued. Other key metals have had conspicuously little reaction. This may all mean markets have been quite unimpressed with the scale of the stimulus effort. No one is actually gearing up for the recovery. But local investors still think they are, however. But Aussie investors are very sceptical. Staying in China, an overnight announcement revealed a one-off cash handout to their poor will happen early next week. The amount of the gift, however, wasn't revealed. And overnight, the Swedish central bank cut its key policy rate by 25 basis points to 3.25%, following a similar move in August and in line with market expectations. They signalled further cuts in the two remaining monetary policy meetings of the year. In Australia, August inflation, as monitored monthly, was expected to fall to 3.1% from 3.5% in July. But in fact, it fell far more sharply, down to 2.7% in August from a year ago. The RBA will be relieved that this is the first indication they wanted to see of it being within their 1 to 3% target range. The US Treasury 10-year yield is now at 3.79% and up 6 basis points from yesterday. And the price of gold will start today at $2,661 an ounce and up $11 from yesterday to yet another all-time high. But oil prices have fallen $2 to $69.50 a barrel in the US, while the international Brent price is now just over $73 a barrel. Libyan supply is on its way back. And the Kiwi dollar starts today at 62.7 US cents and down more than the half a cent it gained yesterday. The spike was brief. Against the Aussie, we're down 20 basis points at 91.8 Australian cents. Against the euro, we're down 40 basis points at 56.3 euro cents. That all means our trade-weighted index starts today at 70.3 and down 30 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.